The world is holding its breath as missiles fly and headlines flash. But while global leaders are trading threats, another war is being fought on the crypto charts. We've seen how billions of dollars can be wiped from the market overnight, all triggered by a single event thousands of miles away. The escalating conflict in the Middle East has quickly become the #1 driver of fear and volatility, not just for stocks, but for Bitcoin, Ethereum, and everything in your crypto portfolio. Welcome to my channel, The Money Blueprint, and I am your host, Michael. I want you to think to June 2025. As US airstrikes reportedly hit Iranian nuclear facilities, Bitcoin suddenly plunged below $100,000 for the first time in over a month. Ethereum bled out even faster, dropping nearly 10% in just one day. This isn't just a news story, it's a direct stress test on the entire idea of cryptocurrency. For the next 12 months, every headline, every diplomatic text, and every military move is going to have consequences for your bags. The question isn't if this war affects crypto anymore. The real question is, how deep will the impact be, and what does this all mean for the future of digital money? When news of a conflict breaks, what's the first reaction in any market? Fear. And in the crypto world, that fear gets turned up to 11. The recent escalations between Israel and Iran were a perfect example. Right after the US reportedly joined Israel in bombing runs over Iran, the market saw a brutal sell-off. Bitcoin lost nearly 4% of its value in just 24 hours, while Ethereum and other altcoins took an even bigger hit. This move triggered almost $1 billion in crypto long liquidations, wiping out leveraged traders in an instant. Now, this isn't some weakness that's unique to crypto. It's classic behavior for a risk asset. When uncertainty spikes, investors run from things they see as volatile, and crypto is pretty much at the top of that list. We saw the pattern play out perfectly. An attack, a sharp price drop, and then widespread panic. The Crypto Fear and Greed Index, which is a great indicator of market sentiment, absolutely tanked, showing just how anxious traders were. But what happened next is what you really need to pay attention to. After that initial shock, something changed. When a ceasefire was announced, the market didn't just stabilize, it roared back to life. Bitcoin shot right past $105,000 and Ethereum clawed back its losses. This super-fast V-shaped recovery tells us two things. First, the crypto market is now glued to geopolitical headlines, reacting instantly to news of both escalation and de-escalation. Second, even with all the panic selling, there's a strong wave of buyers who see these dips not as a disaster, but as a discount. The market structure held up. Institutions didn't run for the exits, and there was no catastrophic technical breakdown. That resilience, especially in the face of the worst military action in the region for years, suggests the market is maturing, even if it's still incredibly volatile. For years, a lot of people thought crypto lived in its own little bubble, safe from the problems of the real world. Well, that fantasy is officially over. The war in the Middle East has shown, once and for all, that Bitcoin is a macro asset, and it's tangled up in the global economy. The conflict doesn't just hit crypto directly through fear. It creates powerful ripple effects that are going to shape the market for the next year. The biggest one? Oil prices. A long conflict, especially one that messes with shipping through a critical spot like the Strait of Hormuz, could send oil prices soaring. Higher oil prices mean higher inflation for everyone. This puts central banks like the Federal Reserve in a tough spot. Do they keep interest rates high to fight inflation, which is bad for risk assets like crypto? Or do they start cutting rates to help a slowing economy, which could be rocket fuel for Bitcoin? This economic uncertainty is a big reason why Bitcoin has started acting more like digital gold. As the conflict makes people nervous about inflation and erodes trust in regular currencies, both small and large investors are looking for a store of value that a government can't just print more of. We're seeing a clear shift. Bitcoin used to move almost in perfect sync with tech stocks, but in 2025, its price has tracked much more closely with gold, especially when geopolitical tensions are high. This conflict is also speeding up the trend of de-dollarization. Countries around the world are looking for financial alternatives that aren't controlled by the US. While this is a slow burn, a long-term shift, the current crisis is pouring gasoline on the fire. It reinforces the whole argument for a decentralized, global asset like Bitcoin. That's the paradox. Even as crypto sells off because of short-term panic, the long-term case for it is actually getting stronger because of the instability. Over the next 12 months, get ready for Bitcoin to live a double life. On one hand, it's a high-risk asset. On the other, it's becoming a safe haven asset. Figuring out this paradox is the key to surviving the market right now. In the short term, any headline about the conflict getting worse will probably trigger a sell-off. Analysts have been warning that if the US gets dragged into a direct and sustained fight, we could see a 10 to 20% drop in Bitcoin's price. That's the risk asset side of its personality showing, where traders just sell to lower their risk. We saw exactly that when Bitcoin dipped to nearly $98,000 after news of the US strikes. But the way it bounces back after those dips is where the safe haven story kicks in. Every time the price has fallen, it's been met with a wall of buying pressure, especially from big money institutional investors who can now easily buy in through spot ETFs. These guys aren't day trading the headlines, they're accumulating Bitcoin as a long-term hedge against global chaos and inflation. This institutional buying creates a strong price floor, preventing the kind of total collapses we saw in past cycles. If we look back at other conflicts like the war in Ukraine, we see a similar pattern. There's an initial shock and a price drop, followed by a period where Bitcoin finds its footing and even starts to climb as the side effects like inflation and capital controls start to bite. BlackRock even pointed out in a 2024 report that Bitcoin has a history of outperforming traditional assets during past geopolitical shocks. So for the next year, expect Bitcoin to be a tale of two trends. It's going to be vulnerable to sudden fear-based drops. But the underlying demand from institutions and its growing role as an inflation hedge will likely lead to strong recoveries and a slow grind upwards, as long as the conflict doesn't explode into a full-blown world war. While Bitcoin is walking this tightrope between a risk asset and a safe haven, the story for Ethereum and the rest of the altcoin market is a lot more gloomy. There's a saying, if Bitcoin catches a cold, altcoins get pneumonia. This conflict has made that brutally clear. When Bitcoin dropped 4%, Ethereum fell almost 10%. This underperformance is a key trend that's probably going to stick around. Why is this happening? First, Ethereum and other altcoins are just way riskier. In a risk-off mood, when investors are scared, money flows from the riskiest assets to relatively safer ones. Inside crypto, that means money moves from altcoins to Bitcoin or just leaves crypto altogether. The ETH-BTC ratio, which basically measures Ethereum's strength against Bitcoin, has been falling, showing this flight to safety. Second, activity on the Ethereum network itself has taken a big hit. The number of daily active users on Ethereum plunged by 26% when tensions were rising. That means fewer people are using the network to send money or use DeFi apps. When network use drops, it hurts liquidity and the whole value proposition for many of these projects. This whole situation has basically put the altcoin season we've all been waiting for on ice. An altcoin season is when money rotates from Bitcoin's big gains into smaller, riskier projects, hoping for even bigger returns. But with all this geopolitical uncertainty, investors are playing it safe. The big institutional money is flowing into Bitcoin ETFs, not some random altcoin. People just aren't willing to take that extra risk when the global picture looks so shaky. Until we see a real lasting de-escalation in the Middle East, expect Bitcoin to stay king, while Ethereum and the rest of the alts continue to lag behind. Look, navigating this market means you have to stay informed, pretty much every single day. If you want to keep up with the latest analysis on how geopolitics are messing with your crypto portfolio, make sure you subscribe and hit that notification bell so you don't miss a thing. So, looking ahead, where does crypto go from here? The market's path over the next 12 months is almost completely tied to how the conflict in the Middle East plays out. So instead of one single crystal ball prediction, let's break down three possible scenarios. Scenario A, the bear case, escalation and contagion. In this scenario, things get a lot worse. We're talking more direct military fights between major powers, a successful blockade of trade routes like the Strait of Hormuz, or even cyber warfare that attacks financial systems. In that world, the risk-off shock wouldn't be temporary. We'd see a long-term downturn in all markets, including crypto. That 10 to 20% drop for Bitcoin we talked about, it could easily become a reality, pushing the price down to test even lower levels. Ethereum and altcoins would get absolutely crushed as liquidity vanishes and the appetite for risk disappears. The digital gold story for Bitcoin would be seriously tested, and it would probably start tracking closer to traditional markets as they both fall. Scenario B, the neutral case, a tense stalemate. This is probably the most likely outcome. The conflict doesn't blow up into a wider war, but it doesn't get solved either. What we'd get is a long period of tension, with occasional flare-ups and shaky ceasefires. For the crypto market, this would just mean more volatility. Prices would swing back and forth on every news headline, a paradise for short-term traders but a total headache for long-term investors. Bitcoin would likely be stuck trading in a wide range, held down by the constant uncertainty but held up by the slow, steady buying from institutions. In this scenario, Bitcoin's dominance stays high, and any hope for an altcoin season gets pushed back indefinitely. Scenario C, the bull case, de-escalation and a diplomatic breakthrough now for the optimistic scenario. Here, diplomacy works. We get a lasting ceasefire and a real de-escalation of tensions. As we've already seen, the market loves news like this. A sustained peace would remove the giant cloud of uncertainty hanging over the global economy. This would flip the switch, and suddenly everyone's back in risk-on mode. Capital would flood back into the market, likely sending Bitcoin to retest its old all-time highs. Some analysts think we could see a return to the $108,000, $113,500 range, and more importantly, this stable environment would finally set the stage for a real altcoin season. With the fear of a global crisis gone, investors would feel confident enough to rotate their Bitcoin profits into Ethereum and other alts, chasing higher returns and potentially kicking off a massive rally across the entire crypto space. For the next 12 months, the crypto market is basically a geopolitical barometer. The war in the Middle East has tied the future of digital assets to the chaos of global conflict. Bitcoin has shown it can take a punch, weathering the initial storms and making its case as a store of value in a shaky world. Still, it's vulnerable to short-term shocks. Ethereum and the altcoin market are in a much tougher spot, held back by the flight to safety and likely to underperform until real stability returns. The path forward is anything but clear, and if you're an investor, you need to watch the world news just as closely as you watch the charts. The future of this market is being decided right now, in the middle of a global conflict. We will keep you posted on how crypto is evolving during these turbulent times. If this breakdown gave you some good food for thought, please smash that thumbs up button. It really helps us out. And if you're not subscribed yet, hit that subscribe button and the little bell icon so you get notified right away when we drop new crypto insights. Thanks so much for watching. And just a reminder, this isn't financial advice. Always make sure you do your own deep research before making any investment moves. I'm your host Michael, and this is the Money Blueprint. See you in the next video.